Hey everyone, how's it going? Hi there. I'm gonna wait for a few of you guys to join so that I can go ahead and start with the introduction. I am super excited to be able to share this platform with Built by Girls. Hi everyone. And I really want to be able to connect with all of you and talk about investing. It is definitely a topic that I believe most women, girls shy away from. It is complex and there's just so many different things involved in investing, but I want to just kind of break it down for you in the simplest of terms and share a little bit about my story, my journey, and hopefully that is relatable and it can help you, start thinking about ways you can start investing this year, which I think it's probably one of the best opportunities to get in the market and start, making your money work for you. So we have definitely lots of people on, so I will go ahead and start with my introduction. So my name is Wendy. I am the founder of Invested Millennial. I am a female in tech. I work for Tesla. I'm going on my 5th anniversary very soon, so I am a Tesla dinosaur. I started working at Tesla in 2015, right before graduating UCLA. I was still in my last year, my senior year at UCLA when I started, and I decided about, I really started learning about investing from working at Tesla. As an employee, I received stock options and RSUs, and I really wanted to, understand how I can start investing the money that I was making back then. So my whole investing journey was really eye-opening as a Tesla employee, and that's kind of how I started. I started initially with a Roth IRA, which is an individual retirement savings account, and then from there I really started using that to understand how the market works. And 2 years after, starting my investing journey, I decided to create Invested Millennial. So initially it was a platform for me to just share my investing trades, to share every stock that I was buying or selling, and just to be transparent with my audience. And then from there, I realized that the information I was sharing was a little complex. Most of my audience, I really wanted to cater towards women, and I felt that most of them just really didn't understand what I was talking about. So instead of talking about the technicalities of investing, I decided to share more information, bite-sized investing info to really help you understand the simple investing concepts. And from there, I've been able to build an audience on YouTube and my Instagram page that is primarily new investors, female investors who just want to understand how they can also start investing with little knowledge, with little money, and build from there. So that's kind of how everything kind of intertwines together. I am also a new Built by Girls advisor, so I'm super excited to be able to mentor other young women who are interested in careers in tech, and I definitely share a lot about my journey as a female in technology, working at Tesla, which is one of the most, innovative and intense companies to work for. So I'm very excited and happy to be able to give back in that way. So hello everyone. I know you guys are messaging me. So Allie, you said, how old were you when you started investing? So I started investing at 22, and that was via the retirement account. And I wish, and this is why I created Invested Millennial, I wish I actually started investing when I was 18. I started working at the age of 16. My first job was at Cold Stone Creamery. I was in high school and I was working part-time, and I wish I would have put money away towards my investments then, but I didn't. And I was 16 years old, didn't really know much about investing. I come from a background where my parents are immigrants. They don't know about investing. The only thing they know is save, pay your bills, and live day by day. So for me, I never had the tools necessary to really use that to my advantage to build long-term wealth. It was until I actually went into the real world and started my career that I was surrounded by all these very smart individuals talking about investments that I was like, oh yeah, I need to do this. Like I need to set myself up for success. And that's kind of how it all started. So I had a little bit of a late start, but honestly, if you start investing in your 20s, you're still so young. But it's even more beneficial if you start when you're 18. And I'll talk about those reasons why later in this live. So I hope that answered your question. So let's start talking about the gender investing gap, which is one of, the biggest things in the world of investing that is a systemic issue, I believe. Just like the gender pay gap, there is a gender investing gap. And the reason for this is because there's not a lot of representation of females in the finance industry. There's not a lot of women talking about investing. If you were to go on YouTube and, type in how to make $10,000, for example, I'm just throwing it out there, you will probably find the majority of videos of female creators talk about budgeting, talk about, cutting, your expenses and, managing debt, which are all super important in the world of personal finance. But rarely do you find other women actually talking about what trades they're making, what companies are on the come up that will be potential good buys for you to invest now. You don't find women actually diving into those investing topics. You do find more men on YouTube talking about that. And so that's one of the other reasons why I created Invested Millennial, because I am a beginner. I don't consider myself an expert at all, but I want to share with you what I invest in, how my portfolio is looking, how it's performing, what actually lost me money. I'm very transparent on the wins and the losses and the mistakes, because that's the only way that I feel that I will be able to share with you knowledge that you can then take and implement in your personal finance journey in the world of investing. So with the gender investing gap, I really think that we as women need to work together to, one, understand the power of investing, what it means, how to use it as a tool to build wealth over time. Investing is not just a one-time thing where you put your money in the market and then, you don't do it again. You actually do this throughout your whole life so that by the time you retire, you have a nice, stash of money waiting for you to be used. So it is an ongoing process. You learn as you go. It takes time. So in order for us to close the gender investing gap, I truly believe that we need to foster a community of women online, offline, that really, work together to talk about different investing topics. So let me answer a few questions before I dive into the next topic of this discussion. So one of you guys said buying stocks is so scary, especially when you can't afford to lose money. I agree with that. And that's where research, which is the next topic, is key. When you're investing, it is your hard-earned money. You work so hard for your money. The last thing you want to do is go into the market with blindfolds on and invest in companies you don't even know, sectors you don't even understand. And that's why investing takes a long time to actually, for me, it took me a while to start investing until I felt that I kind of understood certain trends, certain industries. Initially, I started investing in the tech sector. I am a tech employee. I understand how it works. I understand, the major tech companies, Facebook, Microsoft, Amazon, Tesla. So I decided to start with tech, and then from there I started building different, positions in different sectors. But in order for you to feel confident about your investments, you actually need to put in the work of understanding the companies that you invest in. So just a tip, if you are afraid of investing in stocks, you can also buy ETFs or index funds that actually track the market. They track either the S&P 500 or the NASDAQ. That way you're not buying individual stocks, but you're buying an index that will track the overall health of the market without you feeling self-conscious about making the right decision. Let's see, another question we have here is, how do you start small with investing if you don't have a lot of money? So the beauty of investing is you don't need thousands of dollars. I actually think that if you're a new investor, it's very dangerous to start with thousands of dollars. You should probably start with a couple hundred, test the waters, invest in companies Obviously, like for example, we all know about Disney. We all know about, let's see, I'm trying to come up with affordable stocks in under 100. So we know Disney. Boeing is in the hundreds right now. It was like 300 at some point. So invest in companies that are integral to the US economy, that are within that budget that you have, and buy a few and build from there. And with practice, you'll gain that confidence to start, building a bigger portfolio. So another question we have here is, hello, I've invested from a young age because my father has taught me. My mother does not know how to invest. Thank you for closing the gender investing gap. Oh, thank you. That's actually not a question. Thank you so much. What websites would you recommend to do your research on? So my number one website, and this is actually a funny story, how I found out about Built by Girls. Right now I'm working from home, but even when I'm in the office, I always have Yahoo Finance on. So literally throughout the entire market open, which is from 8 a.m. Pacific Standard Time, when I'm up to about 1 p.m., I have Yahoo Finance on. I'm listening to it, I'm working. I have two screens so I can see what's going on. They have live market reporting and I can do my work on the other side. And I'm just listening to the market, what's happening, what stocks are trending, what stocks are not doing well, what sectors are underperforming, what's going on. And that helps me understand the overall market trends that day. And sometimes I even execute buys on the job because I realize, oh, that's a good opportunity right now. Let me go log into my account and purchase XYZ. So that's how I do my research. I listen to it Monday through Friday. There is not one day where I don't really track the market, whether it's on my computer listening to Yahoo Finance or on my phone. I have the Yahoo Finance app, and that's kind of how I stay informed of what's going on in the market. So I hope that helps. It's definitely a great platform. It's 100% free. You can stream the live market reports from your phone as well. How do you think we as women can encourage more women to become financially independent? Well, the beauty of that is I feel, or I've also seen that especially on social media, there are so many amazing pages, like community pages where women promote their financial debt freedom journey, or where they promote the importance of financial literacy. And I think the fact that we're starting to build these communities online will help the overall, this overall issue of of women not taking the actions necessary to be financially stable. So I really encourage you to find those community groups, find those Facebook pages, find maybe some YouTube channels that promote female empowerment and financial freedom and financial literacy, and really learn from their experiences and connect with them, DM them, and you'll be surprised that most of these amazing women creating this content, they're so happy to connect with you and share their tips and just be vulnerable and transparent about their journeys. Another question is, can you talk more about learning to read balance sheets? Yes, okay. Balance sheets is a component when it comes to investing where you're reading the financial health of the company during any given quarter or during the fiscal year. So balance sheets are definitely very difficult for beginners to understand. It takes practice. There's certain things, or not practice, but it takes getting used to. I would say the first thing, if you're a beginner, I would say to go to investopedia.com. That's another free resource, 100% free. It's the best place to get any investing terminology information, to get article information about a particular industry. Search balance sheet on Investopedia. It's literally a dictionary for investing, and then you'll find different resources that show you what to look for in a balance sheet. What does a balance sheet mean? What does each individual category in a balance sheet indicate about a company? Go to Investopedia, check it out. You'll be able to get more information about balance sheets there, and then just do some real life analysis of balance sheets of companies that you would like to invest. And then you can go to Yahoo Finance, type in, for example, Tesla, look for their balance sheet, and you'll be able to get that information and see if you can apply the knowledge you learned from Investopedia into analyzing the balance sheet of Tesla. That's an example there. Okay, so many questions. Let's see. Are there safe investment apps you recommend? So there are amazing apps out there for beginners. My personal favorite, because I'm all about female empowerment, is Analyst. For those of you who don't know, this is a investing platform. It's a robo-advising platform, meaning you're not actually physically picking stocks yourselves. You're depositing money into an app, and the Analyst team will invest your money in bonds, stocks, different assets that will help you get to your goal at the end of, let's say, 5-10 years. So if you really want to invest but don't have the time to research stocks, you want to be more hands-off, you can start investing through Analyst. If you want to be a little bit more hands-on and pick stocks that you feel resonate with your beliefs or your preference, there are apps like M1 Finance, Betterment. Obviously, Robinhood is a great beginner-friendly app to start investing, and these will give you the flexibility to either do more robo-advising investing or for you to actually invest and pick companies that you want. So you have, the whole spectrum. If you want to just start investing in, more established, I don't want to say established, that's the wrong word, but if you want to invest in platforms that have more tools, that's where Charles Schwab, Fidelity, E-Trade, Ameritrade come in. Interactive Brokers, these are established online brokers that give you a lot more tools, a lot more access to the US market and to other markets outside the US. But if you're just starting off, in Robinhood, LFS, M1 Finance, Betterment are great tools. How do you choose between long-term and short-term, especially for companies we know of? Can we make a profit in the short term? Okay, so for me, I'm gonna be very honest with you. I normally just do long-term investing, meaning I typically don't withdraw money from a stock, even if it's losing money, shorter than a year, because one, if I'm making money on a stock and I sell in, let's say, 9 months, I'm gonna be taxed at a higher tax bracket because I didn't actually take advantage of the capital gains. Like I'm taking the money earlier. So in order for me to be taxed at my normal tax bracket, I wait for my stocks to be in my portfolio for a year. When it comes to short-term investing, it really depends on your situation. Let's say you are trying to buy a home, or you're trying to pay your next tuition bill, I don't know, something like that, and you need the money in like the next 6 months. Then if you're in a tough situation like that, of course you can, sell your stocks, take your money, and that's it. But normally I really recommend that if you're gonna put money in the market, that you have the mentality that you're not gonna touch it for at least a year. That way you can really see how the company does overall, and then you take advantage of selling it at a normal tax bracket versus getting taxed higher. So what key metrics do you look at when deciding on an investment? So some of the things I look for is market cap. Market cap essentially means how big the company is. I normally tend to invest in medium-sized to large-sized companies, and I really stay away from the small cap companies. And if I invest in smaller companies, I invest very little, just because smaller cap companies, in my opinion, I think they're a little bit more volatile than well-established corporations like Disney, like Facebook, like Amazon. These are large cap companies that I feel have a stronger moat, a stronger business model that will succeed. What do you define as a risky investment? A risky investment is anything you invest in that you don't even understand. So even if I talk about Tesla and you don't understand how Tesla works, and you don't understand the risks that come from investing in such a volatile industry, which is the EV industry, that can be a risky investment, even though it's doing great right now. You really need to understand what you're investing in. If you don't understand something, it's just consider it a risky investment. You don't want to be playing with your money. That's where people lose money. They invest because they follow the hype, because they follow someone else's suggestions without them actually doing the research themselves as well. Oh, great. So I think, let's see if there's one last question before I dive into. Okay, someone asked, is it okay if we connect with you on LinkedIn? Yes, feel free to connect with me on LinkedIn. My name is Wendy Cartagena, so just search it, you'll find it. Happy to connect with you. The next topic that I want to talk about is what you should be investing in depending on your age. So like I said, I wish I would have started investing when I was 18. I think that if you are in high school and have a part-time job, this is the best time for you to start contributing towards a retirement account. So it's never too early to start. The earlier the better. When you're working part-time, you are literally at the lowest tax bracket possible. You're not earning big money. You're not earning, 80K plus. You're literally, living at home. You have a nice paycheck. So start contributing to a Roth IRA or IRA account. There are differences between a Roth IRA and and a Roth IRA. So an IRA is essentially money that your employer will typically put into an account for retirement. It's pre-tax. So what I recommend is if you are in high school, for you to start opening up a Roth IRA, have that going in the background, and you're contributing money that has already been taxed. So once you get your paycheck from whatever part-time job you have, try to put at least 10%, 20%. If you can do 50%, go for it. Literally, if you're living at home, I say be stingy with your money. Put 50% of that money into a Roth IRA and live off the other 50%. You're not paying bills. I'm sure you're not paying, for food. So really take advantage of living at home if you're young, if you're 18, and really put all that money away into a Roth IRA. And then once go into the real world and get a real job and start a career, then you can have your Roth IRA, and then you can open up your IRA with your employer and start contributing into both. That way you have a Roth IRA and an IRA going at the same time, which will mean stability and security once you retire. Okay. Do internships count towards a retirement? I actually don't know that. If they give you income, then technically, let me backtrack. Normally, if you are in an internship, they're not going to offer you an IRA. You are an intern, you're not expected to stay at the company for, 6 months or whatever, I'm not sure. But if your internship does pay you money, then that money you're getting paid, you should probably use towards your Roth IRA, because with your Roth IRA, you can be depositing income that you receive from any type of job. So I hope that answers that question. Perfect. So Ellevest, by the way, someone asked, how do you spell Ellevest? It's ELLEVEST. They have a great Instagram page as well, geared towards sharing information about, the issues that we women face in the investing world, and how to better use our income to be more financially secure. Another question we have here is, how is our uncertain economy affecting investment strategies right now? So right now the economy is very volatile with this whole COVID situation, but if you have been paying attention, we saw a very scary, very crazy, volatile sell-off situation in March when obviously we went into the shutdown phase. A lot of amazing companies went down to pretty much like all-time lows. So when things like this happen to a country, to an economy where there's uncertainty about a health risk, or there's other uncertainty like war, the market goes crazy. People pull their money out because they don't want to risk losing their money. And that's where young people like us, it's in our benefit to jump in when people much older than us who are, on the verge of retiring are withdrawing their money. People that are older than us on the verge of retiring, they are in the stage of preserving capital, meaning the money they have invested in the market, they are just being very, very particular with how they invest it, because they want to maintain as much of that money so they can cash out. People like us in our late teens, early 20s, mid 20s, 30s, we have a long way to go until retirement. So we have a bigger spectrum, or a wider spectrum of, our risk tolerance. We should be investing when people that are older than us are withdrawing money, because we can't afford to, go through volatile cycles in the economy. In the stock market, the stock market will never be it will never have all-time highs all the time. There are going to be times when things go down, and that's when you want to jump in. You want to, essentially, when the stock market is down, it is a sale. You want to take advantage of a sale because you want to buy quality companies at an affordable price. And that's how you build a portfolio. That's how people become, rich or build wealth. For example, when the housing market is down because of a recession, and if you have, let's say, 20, 40K available, you go buy a property for a cheaper price, then you can build that into an investment property, and you didn't buy it at the marked up prices. So it's all about understanding what's going on in the economy and jumping in when the right opportunity presents itself. What what's the difference between a 401k and a traditional IRA? So I believe the implications of that has to do with the taxation. So the IRS website has a great breakdown of like the difference between the 401k, the traditional IRA, the Roth IRA, what that means. There's also differences in how much you can contribute to each one of these. For example, I can speak from my experience with the Roth IRA. I can contribute a maximum of $6,000 every single year. So, and I also must make under like 120K, I believe. I don't know the exact number, but under 120 for me to have a Roth IRA. So let's say that, for example, in a couple years from now, I start making 200K. Then at that point, I can no longer contribute to my Roth IRA. The Roth IRA money will still be there. It will still stay there. It will still grow, but I just can't physically continue contributing there. And that's where other investment opportunities will probably be better for my income so that I can continue building that capital. Perfect. Okay. Let's jump into the next topic. So I know that earlier I talked about, what we kind of touched on the different investment apps. So I recommend that if you're just starting off, for you to actually look into maybe Robinhood or other robo-advising apps that really guide you through the investing process. It feels great to learn it yourself, but there's also risks associated with that, especially right now with our economy being so volatile. You don't really want to just take these bold moves. You want to be very strategic with investing. So investing is all about understanding what you're investing in and also being strategic. There's a lot of hype online, especially, in the YouTube community. I can speak about that because I make content on there as well. They hype up investing. They hype up how much money they're making. They hype up, their ability to pick awesome companies that always makes them enough, like a lot of money. But that's not the case all the time. And in order for you to become a good investor, a strong investor, an investor who will continue making gains every single year, that takes time. And I want you to understand, investing is not something that you learn in a year. Investing is a lifelong learning journey because the market always changes. New companies come on, like new IPOs happen. So there's like new technology. Everything changes all the time. So if you really want to have investing be a part of your personal finance, I don't want to say journey, but a part of your finances, and you really need to just make it a habit of investing a little bit and doing that every single, time, every single month, every single year. Continue having that be a process of your finances, and that's how you'll be able to really become a good investor. So please don't get discouraged when you see people talking about how much money they made in a year and how they beat, the average percentage, because that's those are outliers. That doesn't really happen. And you can, if you want to learn from one of the best investors in the world, who is Warren Buffett, he is a long-term investor. He has built his wealth from, understanding companies and taking advantage of opportunities and just being consistent with his investments. And that's how he became a billionaire. I'm not saying that we're all gonna become billionaires, but I think we all can build money and grow our wealth over time into something that we probably wouldn't be able to do by just saving alone. So investing is definitely something you should have in your toolkit, in your finance toolkit, and use it to your advantage, especially if you're young. Start, investing that part-time paycheck in a retirement account. And, once you're in college, I'm sure we might have a part-time job. Maybe invest $100 a month. That's still something. The worst thing you can do for yourself is not invest because you think that investing $50, $100 is not worth it. It's worth it. Trust me, it will compound over time. So just get into the habit of putting money away into an investment portfolio, and it's the best habit that you can have for you to build wealth. The next question I have, we're about to finish our live, by the way. I hope I answered all of the questions and that you get a better sense of my goal with Invested Millennial and, the reasons why investing is important. So it says, can you invest as an entrepreneur? Of course, you can invest as an entrepreneur. If you're, receiving income from your side gigs, from your side hustles, from your business. That's income you're receiving. That's income you can invest in a regular brokerage account or in a IRA. So if you are a self-employed person, you can have a SEP IRA, SEP IRA. That's usually for business owners where they can contribute money from their business. And oh, by the way, this will be saved and we will upload this to the page after the live session, so you'll be able to rewatch it. And the last thing I do want to share with you, once again, I want to remind you of the resources. So the last thing I can well, actually, let me actually backtrack. When you start wanting to learn about investing, you're gonna find a lot of people that are gonna wanna sell you courses, okay? They're gonna wanna tell you, oh, invest with me, or like, you know, let me help you invest and you pay me X amount of money. Don't do that, okay? Literally, you can learn everything you need to learn on how to start investing online. The content is there for free. Don't get scammed into, you know, by some Instagram page saying that they're gonna help you invest. No, that's all fake and that's a complete scam. Do the work that it takes to become a good investor by researching websites like Yahoo Finance, Investopedia, literally a simple Google search, find blog posts about companies you want to invest in. You can look at Zacks.com, that's ZACK.com. That is a research company that there's many of these, but I use Zacks. They evaluate companies on a scale of 1 to 5, meaning like each number represents whether you should buy, sell, hold, or stay away from it. And I use that as an indicator of what I should be looking for and if I should buy or hold a stock. That's essentially market research available for people, and it's free. You can get the paid version as well, but I just use the free online tools that I find, and I use that to my advantage. And you know, I just ask questions, you know, connect with people, ask them about their opinions, and always make sure that if you're going to make an investment, that you do it from your, I guess, intuition, that knowing that you feel comfortable making that buy. Never invest in something that people tell you to invest. Make sure that you do the research, and if you feel that it's right for you, that's when you execute. So don't follow the hype. As an adult and as a teen who is going into adulthood, you need to make your own decisions, and it starts by you doing the work necessary to be educated. So I think, because I don't want to make this too long, I think I went a little bit over the time limit. Seriously, if there's any questions that you have about investing that I didn't answer, if you just have something more personal, you can DM me, you can connect with me on on LinkedIn, message me, and I'll be more than happy to get back to you and answer any questions you have. It's all about building a community for me. I really just want to help inspire the younger girls that are going to college, to really help them to set them in a path that will be better than mine, because I started a little bit late. I'm still young, but I wish I would have done that, right, when I begin my college journey. So reach out, connect with me. More than happy to share some tips, talk about my career, which I didn't really talk about here, but I am available to all of you. And thank you to all of you who have stayed for the entire live. And I'm going to end it there. Have a wonderful Thursday. Have a wonderful weekend. Stay safe, and I will be talking to you guys very soon. Have a good one. Bye, you guys.